Hello, and welcome back to the Financial Freedom Show. It's almost the end of the year. This is probably the last video of 2023. I hope you guys enjoyed joining me on this journey. In this video, we're going to discuss something a little bit different today. We're going to discuss how to create a monster dividend portfolio. This is going to be a portfolio that you can retire off of. So what I've been doing is I've actually been repositioning my portfolio to take advantage of some opportunities that I've seen in the market recently. The opportunity that I see the most in this market is the company Hershey. I believe it's on a huge decline, and I've actually added a large position to my portfolio in that company. My goal is to build a monster dividend portfolio. I want to have a portfolio that pays me on a regular basis, and there's income coming in that can replace my active job. So eventually I want this portfolio to continue to compound, and I'm looking for companies that are good value, but also really good companies. Like, I want companies that are monopolies. So Hershey is definitely a monopoly in the candy space, I believe. And they have quite a moat. I mean, most people have heard of Hershey's, and they actually have the largest market share in chocolate at about 33% of the market. So definitely have a strong moat, and it's something that I'm adding to my portfolio. So in this account, you can see that I've been moving stuff around. I actually sold out of everything in my Roth, and I am holding $7,500 in cash. I sold out of everything in my regular account as well, and I bought about 52 shares of Hershey's, a little bit over that, at an average cost of $184.26. Hershey's has been on a decline over the past couple of months, so it's definitely on the 52-week low of its recent price, and the PE ratio of Hershey's has gone down quite a lot. It's actually near the COVID low of 18 PE ratio. The average PE for Hershey's is around 24, so it's definitely on a dip, and it's definitely an opportunity that I'm willing to pick up because they have great cash flow and their dividend is very stable. If we go to the dividend view, you can see that I am making $249 a year currently from Hershey's, but I'm looking to purchase all of the money in my Roth into Hershey's. So that's going to actually up my dividend per year to about $500. And that's something that I'm really excited about. I want to continue to see that grow. Hershey's dividend compounds each year at about 13%. So each year I'm going to get a 13% raise on that dividend. So that's going to be really exciting to see. And I hope you guys enjoyed the journey with me. It's going to be a wonderful opportunity, I believe, in the coming year or two to hold Hershey's, as I believe it's going to have a multiple expansion pretty soon when it goes back up. But I'm not only looking for the price appreciation of this stock, I'm looking to hold a company that I'm getting a good yield on cost at the beginning. If we take a look at Hershey's over the past year, you could see that it reached a height of about $276 a share in about April of this year, which was the peak, the 52-week high, and also the all-time high. And then it was on a rapid decline over the past couple of months until it got to where it is today at $184 per share. So that's almost a complete drop of about 50%. That's a huge drop, and I believe it's at a great discount. Warren Buffett always said to buy great companies at decent prices, and I believe this is a really great company, and it's at a very decent price. So that is another reason why I'm purchasing this company, is because it's at a great price. Not only is the dividend stable and increasing, but I believe it is a good value for the price of the company right now. You can see the PE ratio is 19.85. So let's take a look at the dividends for Hershey's. You can see it's currently a 2.59% yield with the market median at 3%. So it's a little bit below the market average for dividend yield. The dividend amount is $1.19 per share, and that's every quarter, so that's 4 times a year that it's paid out. And the next payout is in March. The last payout was in December. You can see over the past couple years, the dividend has been growing over time compared to the market median, which actually dropped in 2021. This dividend continued to grow. It's kind of flattened out over the past year, but that is something that I'll keep my eye on. I believe the dividend is going to continue to increase over time. You can see their earnings per share has been beating every single quarter. They've had great earnings per share beats. They've beat by about 15 cents in Q3, 10 cents in Q2, and 30 cents in Q1. We can look at the EPS over the past couple years. If you see, as the stock increased, the EPS went up, and it continued to go up over time. And then we had this dip here, and that's kind of what caused this giant drop here. If we look at the next earnings per share, it actually went back up. And the analysts are expecting in Q1 the earnings per share to be anywhere in this range. So that'll be an increase from 2023 Q1. And that's why I believe it's a good value. The earnings per share is projected to continue to increase over time. And the stock has gone down to way lower than it was back in 2022 and previously. So I believe the stock will continue to increase back to where it was at the all-time highs once the earnings per share comes in and the earnings reports are released. If you remember, Hershey's beat on their estimates every single quarter. So if they beat on this estimate and they go up here somewhere, it's just going to be an even bigger rally, I believe, because it's at the 52-week low, and if they have great earnings that are increasing over time, it's just going to continue to improve the value. We can see their EPS growth over the current year versus previous year is 11.73%. That's compared to the overall food segment, which is 9%, and the sector, which is the consumer staples, of 9%. So that's really interesting to see that the EPS increase is beating the overall market in the food sector. That's something that I like to see. I believe this company is basically a monopoly. It's got a moat that's unbreakable in the chocolate industry. If you look at the last quarter versus same quarter previous year, Hershey's increased by 29.9% compared to the food products of 15%. Consumer staples was a little bit higher at 37%, but that was because of inflation. Hershey's also benefited from inflation because they had to raise their prices. It also hurt them a little bit because they had increases in their cocoa prices and everything like that. All the costs that are associated with making chocolate increased over the past couple years. If you compare it to the S&P 500, the average was only 13.67% compared to Hershey's 29%. Hershey's currently has a market cap of $37.65 billion. Like I said, their PE ratio is 19.86, and the industry average is 20.14. So wouldn't you rather pay less PE for a company that has a stronger moat than the average market? That's something that I would consider very valuable in this condition. If you look at their gross margin, it's 48%, which is almost 50%. That's pretty good. If you look at their return on equity their return on equity is 52.9% compared to the regular average of 17%, which is stellar performance. Their long-term debt has increased. It's at 111% compared to their average of 80%, which is something to keep an eye on. Their total debt and assets is at 45% compared to 32%. And you can see the overall ownership of the stock. 53% is institutional ownership. 22% is institutional mutual fund ownership. 5% is just regular mutual fund ownership. 1.8% is owned by insiders. And 17.1% is owned by other, which is like retail investors or individual stock owners. If we take a look at the insider transactions, that's kind of interesting to see that in the past, I believe all three of these transactions were sells. So that's something to keep an eye on as well, that the insiders are selling the stock. That's something that I would be a little cautious about. But if we take a look at the overall performance of the stock, as you can see over the past couple years, it's just gone up in a pretty much parabolic line. This past couple months has given an opportunity to get it at a discount before it goes up again, I believe. In my personal opinion, that's what's going on right now, but I wouldn't take this as financial advice. Don't follow me into the stock without doing your own research. Definitely make your own decision when it comes to finances. Don't take my advice. But I believe this stock is going to go to $500 in the future, and I'm just going to continue to dollar cost average into it until it becomes close to that value, at which point I will probably sell out of it. Now, that's not going to be in the next year or two. It's going to be in the next 5 years or 10 years, I believe. But nobody can tell the future. Nobody knows where it's going to go. Analysts are saying on average that the price is going to go to 230 in the next year or two. So that's something to consider as well. In the short term, there might be quite an increase, and then it'll fall off for a bit. But we'll see what happens with the stock. It could continue to dip, and I'll continue to dollar cost average in as it dips and get more ownership in the company, more yield on cost for this company. So Hershey's is something that I'm going to hold for the long term. If it continues to drop, I'll continue to buy it. I am looking to increase my position in my Roth IRA and hopefully continue to dollar cost average into this fund and build my position. So if you guys enjoyed this video, please be sure to give a like and comment down below what you're buying. Are you buying Hershey's? And I'll see you next time.